Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Life is uncertain. Eat dessert first. Ernestine Ulmer. I don't exercise. If God wanted me to bend over, he'd put diamonds on the floor. Joan Rivers. My doctor told me to stop having intimate dinners for 4. Unless there are 3 other people. Orson Welles. The secret of staying young is to live honestly, eat slowly, and lie about your age. I have never developed indigestion from eating my words.
What a difference a year makes. Natural gas has plunged 57.7% from its 52-week high, while silver is down 53.3%, and Bitcoin has fallen 51.1%. Even Brent crude has dropped 42%, and gold is lower by 28.5%. Yet look at equities. The Nasdaq is down just 6.3%, and the Nifty 50 only 8.3%. That's a reminder that not every asset dances to the same tune. Commodity cycles can turn brutal, while stock markets often find support from earnings and expectations. Sometimes the biggest risk isn't volatility, it's assuming everything moves together. As Sir John Templeton said, the 4 most expensive words in the English language are, this time it's different. The AI race has a new leaderboard and is wearing Asian jerseys. MSCI emerging market semiconductor stocks have more than doubled relative to the Mag 7, with the ratio hitting a record 205. While the Magnificent 7 is down 7% this year, the MSCI EM Semiconductors Index has surged 91%. The real stars, SK Hynix is up a stunning 348%, while Samsung has gained 199%. Even in June, as the Magnificent 7 slipped 14%, these chip giants kept climbing. It seems the AI boom isn't disappearing, it's simply changing its passport. Here's a number that's hard to ignore. It took the United States more than 200 years to accumulate its first $3 trillion of national debt. The last $3 trillion took only a year. Since the debt ceiling was raised in July 2025, the total US debt has jumped from $36.2 trillion to $39.3 trillion, an increase of $3.1 trillion in a year. That's an extraordinary pace of borrowing, while markets aren't panicking yet, rising debt eventually means bigger interest bills, more fresh issuance, and tougher fiscal choices. Debt is like cholesterol. It usually makes headlines, and it does not make headlines until it starts blocking something important. As Herbert Stein said, if something cannot go on forever, it will stop. The world's consumption map is being redrawn. By 2030, India is projected to have 772.9 million consumers spending at least $12 a day, making it the world's second largest consumer hub, behind only China at 1.06 billion. That's more than twice the size of the US consumer base at 348 million and nearly 5 times Brazil's. For global companies, this isn't just a demographic story, it's a demand story. The next big growth strategy may not be asking, are we in India, but rather, are we big enough in India? India's stock market has a hidden advantage, and it is not just growth. The top 10 stocks make up only about 35% of the index, one of the lowest concentration levels globally. Compare that with several markets where the top names account for 80% to nearly 100% of the index. That's good news for investors. It means market leadership is spread across more companies, sectors, and ideas. Think of it as a relay race, not a one-person sprint. If one heavyweight stumbles, the whole market does not necessarily trip over. India's IT sector has quietly slipped down the pecking order. Its weight in the Nifty 50 has fallen from nearly 20% to just 7.6%. That's less about IT collapsing and more about the rest of India catching up. Banks, capital goods, manufacturing, and domestic-facing businesses have grabbed a bigger share of the market as the economy has diversified. IT isn't out of the game, it just isn't the only star on the stage anymore. As Yogi Berra said, he gets late early out there. In markets, leadership can change faster than most investors expect.